The Wall Street Journal reported that Alibaba's Singles Day in China has been hit by global supply strains. Is this an over-exaggeration by the publication here, or is this something that we should be aware of? That's what we'll dig into this video. You're watching More Money. Let's get it. Alright guys, so it looks like the Wall Street Journal reported that the overall global supply chain bottlenecks are impacting each other and amplifying the impact of the overall global manufacturer squeeze. And I think they're right, as many Western economies are largely out of the pandemic and related lockdowns. So we are back to normal with our consumption patterns, but what's causing a bit of an issue is that many countries in Asia are still dealing with an ongoing lockdown situation and other COVID-related restrictions. This of course is reducing those manufacturers' ability to meet increasing demand from the West. We all already know that inflation has been climbing as energy and other raw materials are becoming more expensive as well. Power outages have also halted or slowed manufacturing in several provinces in China, while simultaneously the global semiconductor shortage continues to weigh in on electronics production. And we also have to note that some imports into China are arriving slower than usual amid a global logistics disruption causing further delays. So how exactly is this impacting Alibaba, as they are after all the platform where many of these goods are exchanged? Well, to be honest guys, I really think that the Wall Street Journal might be over-embellishing the impacts to Alibaba, in my opinion at least. I think that the impacts to Alibaba are mixed at best. Now let's first start with the merchants. It's being reported that despite higher costs and production delays, in order to continue selling goods, some merchants have decided to stick with their usual price discounts during the Singles Day festival. Other merchants are offering smaller discounts and cutting their advertising spend on e-commerce platforms like Alibaba. This so much is true. So this can signal two potential issues: lower sales volumes from fewer discounts and lower marketing revenue from fewer ads being placed on the Alibaba marketplace. Well, with the first risk of lower sales volume, Alibaba actually reported that this year's total sales hit a record high of 540 billion won, or 84.5 billion US dollars. This reflects an 8.5% year-over-year growth, which sounds great, but we have to note that this was the slowest pace of growth since Alibaba started the festival in 2009. What this really could do is signal that the quarter could actually end lower than expectations. So it looks like for now the volumes are still there, but I'm actually concerned with lower ad revenues generated by the Alibaba marketplace this year. Jason Cook, the CEO of an e-commerce marketing consulting firm, WPIC, said that this year was the first time he has seen ad spots open up in late October as a Singles Day festival got underway, which he attributed to other sellers canceling placements because of insufficient supply. So as investors in Alibaba, this is something that we should be carefully watching, as it is the continuation of a weaker Chinese consumer sales growth trend, which is of course impacted by supply chain issues. Overall, I do believe that the supply chain disruptions could really hurt results over the short term. Add that with the power disruptions, and I think you could have a challenging quarterly results for Alibaba, but overall the business is sound and I do expect it to continue to do well over the long term. Now, how has this news impacted my overall valuation? It really hasn't. I believe that Alibaba is worth somewhere in the $300 per share range, and the reason why I get to that is because I'm actually discounting the growth in the retail space to a lot lower than what I feel other people are doing. So I've already really built in a margin of safety on a segment by segment level. Also, I'm not attributing anything to Ant Group, so there really is upside there as well. And of course, I think that the cloud business continues to do very well. Now, is the Chinese growth story over? I'm not so convinced. I completed an analysis of all three major items that are scaring economists in this video right here. And of course, if you're new to the channel, I really hope I earned your subscription, and please don't forget to smash that like button, as it really helps YouTube know that this channel provides valuable content, and thus so share it with more viewers. Thank you very much for watching, and I'll see you later.